Hello everyone, welcome to the Ichimoku daily analysis for gold for Wednesday, July the 7th, 2010. Well, a continuation of the trend to the downside, and we can see that we had a candle with a lower high, lower low, an inside bar which didn't change the trend, an outside bar which didn't change the trend, and now a candle with a lower high and a lower low. Unfortunately for the bears, this is a spinning top type candle, so it tends to suggest that the market won't go on with this downtrend. The spinning top type candle is a candle of indecision, and that's because we have a very small body with a relatively large shadow on the top and the bottom, and the shadows on the top and the bottom are all about downside price rejection from by the shadow on the top, and upside price rejection and the shadow on the bottom. So it's sellers coming in and then buyers coming in as well. So a big battle between the bulls and the bears on the day, with it not being resolved satisfactorily. Having said that, though, we do have a green body to this candle, and that's in contrast to the previous fairly large red body. And that tells us that the power that the sellers had on the previous day has evaporated, and the buyers are attempting to take control of this market. They made some net bullish progress on the day between the open and the close, and even though it was only a fairly small amount, they did close the market just above the midpoint level, which means that they did close this market in control, although it was fairly weak. And the shadow on the top suggests that the buyers actually lost some of the commitment that they had later in the day when they were trading up around these highs. By the same token, however, the sellers lost commitment that they had when they traded the market down below the previous low, so that's not bearish either. Interestingly, though, this is a potential harami bullish reversal pattern, and that's where the body of the current candle is completely engulfed by the body of the previous candle, a bearish candle, the previous candle, and a slightly bullish candle on this one, although that doesn't really matter whether it is. But the reasoning behind this being a reversal pattern or a potential reversal pattern is because of the size of the bodies. And the previous day we had a large bearish candle, which means that the sellers made some net bearish progress, and today that's evaporated. We have a very small amount of progress made today, and in this case it was made by the buyers, not the sellers. So considering that, we do need to watch the high of the current candle for a potential higher high and a higher low. Now the market should find support down around the area below the top of the cloud here, and the market's now trading back up above the cloud. And if the market does continue selling off, remember it's in a downtrend, then it should continue to find support within the cloud. And we can see the shadows on the 2 or 3 previous candles where the market was interacting with the cloud previously. If the market does trade to the upside, then we have some small downside price rejection on the candle from 3 days ago, and then yesterday's candle was a strong area of rejection from around the 12.10 up to 12.15. So that area should be watched for potential resistance, and then certainly around the Kijun-sen and Tenkan-sen, which are trading near each other, roughly around 12.27, 12.25. Coincides with the previous area of strong resistance and support. So the market will find quite a strong barrier up there if it does appreciate. So obviously, as I've said, watch the high of the current candle for a potential change of trend with the bullish harami pattern, and watch the low for a potential continuation down to the bottom of the cloud, but the market may find support anywhere through the cloud.